And now let's turn our attention to business news. The Federal Reserve decided to raise interest rates following its policy meeting on Wednesday. Investors are closely watching how other central banks will react after the move. Let's go to Gene Otani with more on this. Well, Gene, this definitely has an effect on everything from the economy to markets. Did it really take people by surprise, though?
Well, it's pretty much in line with expectations, Minori. It's the second increase this year and the fourth time for the Fed to raise rates since December 2015. The officials say that the U.S. economy is on track for gradual expansion. The statement says the central bank will raise the range of the key rate to between 1 and 1.25%. It also suggested that the Fed plans to start reducing the size of its balance sheet within this year, gradually ending the massive supply of funds to markets. Fed Chair Janet Yellen held a news conference following the announcement.
Our decision to make another gradual reduction in the amount of policy accommodation reflects the progress the economy has made and is expected to make toward maximum employment and price stability objectives assigned to us by law.
Yellen indicated further rate hikes are in the pipeline.
We also expect the neutral level of the federal funds rate to rise somewhat over time. Additional gradual rate hikes are likely to be appropriate over the next few years to sustain the economic expansion.
The Fed kept its forecast that it will increase the rate 3 times this year. For more on the Fed's latest decision and its possible effect, my colleague Ramin Melagard earlier spoke with Shinichiro Kadota from Barclays Securities. We started by asking him what he took note from the latest announcement.
There were two things that I was focusing on. One was on the balance sheet reduction plans, and the second was their outlook for the future Fed hikes. So on the first point, the Fed did announce their plans for the future balance sheet runoffs. Specifically, they said that they'll set up the caps of the balance sheet reduction at a small level first, and then to gradually increase it over the next 12 months, and then run it for like a few years until the balance sheet normalizes. So that was mostly in line with our expectations. And on the second point about the future Fed hikes, we look at the economic projections of the Fed, which show that they have slightly downgraded their economic assessment on the inflation for the 2017, but they kept that future inflation path largely intact. And then they actually have kept our forecast for the future hikes largely in line with the March expectation, which suggested 3 hikes this year and 3 hikes next year. So with that, we are looking for a September decision on the balance sheet reduction, and then we're looking for a hike in December. But if the Fed did recognize the downside risk on the inflation as well, they kind of downgraded their assessment on inflation. So if that weakness in inflation, which was actually evident on the CPI number that was released before the FOMC, continues, then we see some risks that the December hike might be pushed back into 2018.
Now, what kind of impact will this have on Japan and Asian economies?
So on the Japan, I think the focus will be on how the dollar-yen reacts to it. And we've seen the reaction in the dollar-yen. Yesterday was interesting because in the first, it reacted negatively to the weak readings on the retail sales and the CPI. And then it came back a little bit after the FOMC, and I think it was just basically in tandem with the moves in the Treasury market. So so the focus going forward is the key focus will be whether the inflation number as well as the U.S. growth data will develop. If it continues to surprise to the downside, and if Fed hike expectations decline, then it could put some downward pressures on the dollar-yen, and it might have some implications for the BOJ policy in reaction, as I think further decline in the dollar-yen could put, increase some concerns on the BOJ in terms of its inflation outlook. In terms of the impact on Asia, in general, if you look at the markets yesterday, the EM market, EM-like currencies, did relatively fine. I guess it was a dollar weakness. So if that's the case, I think the markets in general should remain relatively stable just outside of the dollar yen.